Hello again, traders. Right, trying to think of doing something different on these YouTube videos because, well, long story short, I made the mistake of clicking on one of those pop-up things, you know, and your feeds, what comes up on your feed on the right-hand side, about 2Breversals, because I was doing a little fly around the web about those. I'm 99% flat on this now. Took it to the pivot there for 12 pips and or 120 points or whatever. That's great as a scalper. Moved my stop back down, and so that I can take this video without the stop getting hit, and got my take profit up there at the next pivot. So, and ideally it'll hit that, but I don't care. You know, I'm out to anything between 7 and 20 pips a trade, and unlike the video that I watched that ended up just being BS to sell a couple of indicators, I think they're called Trading Labs or something like that, popped up, millions of views and all that malarkey, hundreds of thousands of views, followers and whatever it is, subscribers. So the public, the this is for newer traders. You know, hopefully you might come across this in a month or year's time or 10 years time. I've been making videos on here for 7 or 8 years now on YouTube, and you know, all they go on about is liquidity grabs, and then these fantastical RRRs, and there's no need for it. You know, it's time people realize that isn't the way to make money trading. I learned from ex-city traders, and if you've watched all my stuff or you've followed me on Twitter, then you'll know this already, and it'll be boring, so apologies for that, guys. But everyone's on about liquidity grabs, and this isn't a liquidity grab. This is a 2B that is a continuation 2B. And no, well, I don't look at and see what other traders are doing online, so I really don't have a clue what goes on. All I know is what I do, and to my knowledge, there's not a lot that do this sort of thing. So, and that's why I wanted to bring it to sort of the general public's, in the general public's or the newer traders' eyes, because it isn't all about liquidity grabbing. It isn't all about catching the bottoms. It isn't all about RRR. That's been a myth that's been peddled by all these trading wizards and God knows what else other books are out there. You know, the reality is people will not hold a dollar trade. Well, not all people, let's put it this way. There are some really amazing traders out there that have large accounts as well, has to be said. If you've got a £100,000 account and all you're risking is $100 or $1,000, 1%, $1,000 on a trade to make 5,000, then yeah, you know, do it all day long. It's like a hobby almost. But if you've got to make a living trading, or you want to make a living trading, and you haven't got a huge account, then it is highly unlikely you will be able to hold it. I've tried it with 1% trades, and even then, I did with a gold trade a while back. The target was 155 pips. Stop was placed accordingly, calculated accordingly, and because I'm used to taking 12s and 15s and 20 pips, I still was unable to feel comfortable when it got past, I think it was about 37 or 40 pips. Much like this is 30, 39 pips now, or whatever, you know, 370, 380 is 38, 37. So I don't see the point. because, and I'll explain why, because when this comes back down and eats into my profits, I can re-enter, because I can re-enter. I've got a plan for that. So, if I've taken my 99%, but if I close this now, the way I see it, it's highly unlikely. You watch, it'll go straight to that target now, because it is after the American Open, so it's decided its direction, done all this sideways, and it's off. So, directing this whole video towards newer traders, there are 1,001 ways to trade without having to stress yourself out watching the price go up and down and up and down, and waiting for this elusive liquidity grab. The video I watched actually was interesting. It said, don't ever trade this long, a breakout long or whatever, because it might be a liquidity grab. Well, we have a way in the 3CR strategies, multi-time frame momentum strategies, to enter with absolute confidence by using timing and by using multi-time frame momentum. This is not a short situation here or here or here. This is not a liquidity grab. When does your liquidity grabbing SMC, ICT, Traders Lab dingbats, how do they tell you to trade this? You've got to wait all day. Waiting all day for that perfect trade is stressful. It's going to stress you out. You may even sell this because you're not really sure of what or they don't even suggest you use these. Traders Lab do, because they flog them. They flog shitty indicators that have been pulled off Forex Factory, given a new name, and they flog it. Oh, this is. I saw another one. Once you watch one of those things, unfortunately, they flood them into your feed, don't they? And there was another one. This is the super duper 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 MACD with the super duper settings. No testing involved. Just make up a new name, make up a new clickbait selling point, and throw it up there. And they haven't got a clue about trading. Trading isn't about understanding the charts or understanding the indicators. It's really about building a method that allows you to trade with confidence. That's what it's about. It's mind games. So this is all for the newer traders, because the guys, all you fantastic guys that follow me and study my stuff and put in the hours, put in the work to understand it isn't just about liquidity grabbing, 2B reversals, the next greatest pattern and stuff. I mean, the 2B is fantastic. Wyckoff Spring, whatever you want to call it, is fantastic. Even ICT's little, whatever he calls it, new name this month or year or whatever, that is just a 2B. So you ICT boys and girls and men and women, just think a little outside the box, because if you are waiting for that elusive single liquidity grab trade and you hit it because they've told you that's why you hit it, you are leaving so much on the table. And these cults are unhealthy. It's criminal, actually. So anyway, sorry for the bit of a rant, and sorry for the change of focus, as it were. This is a new idea, but all day long now, I've been, I meant to say on my Twitter feed, I've been busy running around. This said longs were on. All the various bits of analysis based on all these multi-time frame momentum indicators said wait for longs. It's that simple, but the easiest way is just look at H4 and D1 there. If it's green, these two are green and these are all, well, in this instance, bluey colour. or these two are salmony colour, red, then I'm looking for shorts. As it is, it doesn't look like there's a lot wants shorting at the moment. So this would be another full-size potential long opportunity, bearing in mind this is only 1% running now. And I'd be happy to hit it again, because I just go up a time frame and look to see whether there's still momentum growing. And as we can see, there's no reason. This is grey, so that's just mirroring what the candle is doing, and red. There is no reason, there's no divergence there, no reason to consider that as a liquidity grab, or whatever they call it. ICT bullshit. So buy the dips. That is one ancient theory that actually does work. You know, there's not many. It's all ancient history. Now we have so much software at our beck and call. So new traders, especially the guys that listen to all the ICT and baby ICT scammers, think outside the box a little, because the guys, you know, there's plenty of scalpers out there and plenty of good swing and trend traders, of course. There's plenty of scalpers. In fact, you know, as I say, I made a point of finding the ex-city, the institutional traders, bank traders, because they know scalping is a really, really stress-free, fast way to make money trading. You know, you can work an hour a day, 10 minutes a day, as I keep saying on my Twitter feed at the moment, and on the few latest videos. You know, timing around the this was probably one of the best things I did on my charts for a long while, because you know, I can just check it on the hour, on the 15 minutes past the hour, 15 minutes to the hour, 30 minutes past the hour, you know, it's 5 or 10 minutes work. Get there 5 to the hour and leave at 5 past. Get there 25 past the hour, leave at 25 to the hour, 10 minutes later. You know, this is a tiny stop loss being hit here. Doesn't bother me in the least bit. You know, it's there really. If you don't watch my videos, if you are new to this, somehow you found it in your feed, then I leave a 1% runner on now, or as near as 1% as I can get, in order to keep me focused on that particular trade I'm in, because I will have entered that trade. I said this in a previous video. I will have entered that trade with an enormous, well, not an enormous, but with a thorough amount of analysis, trading with the higher time frames, so that I can get back into the trade full size when it's ready. As I say, why would I want to hold a trade up to that point there when I can re-enter it when it comes back, when they've taken profits and done whatever, buy the dip. So but you can't just throw trades on willy-nilly. Every trade is analysed, because this may well reverse. There's nothing to stop this reversing. First thing for me to consider this as a valid reversal, the first thing is my 3CR. This is just about to 3-candle reversal down. That's the penultimate, that's the ultimate high. This will be the reversal candle. And then that then leads me on to think, well, this is a 5-minute chart. I can then start to look for the reversal in the opposite direction, because a 3CR in a bullish move, a 3CR is a reversal. It's a trend: high, low, lower, high, lower, low. That's a downtrend. Then we expect a pullback, probably to test this support area here, and then it should continue. that's if it is in a downtrend. This is part of an uptrend. So the pullback should actually potentially 3CR against itself and become the new bullish move, which is how I can trade it down and up. So, and this is your 3CR down, the pinky level. And if that fails to hold as resistance, then that would be potentially, the candle closes through it, and then we watch the reversal to the downside and hopefully get it back to the upside. If it doesn't reverse for whatever reason, the time of the close, then I'll trade the break of the high with all of my correct confluences, as it were. It's got to look like that. Red, green, green, grey, green, red, green, red, green. And look what it did. So that's what I want there. Just look left, as I say all the time. Look left to ensure, and flick between the time frames, to ensure everything is 100% correct. So I'm not trying to flog any indicators. I'm not even mind to flog. I'm just trying to show you there's other ways to trade other than the effing liquidity grabs. Okay, have a wonderful day. Thanks for watching.